Upcoming Fed meeting, the Japan effect, and a full economic calendar. That's what we're looking forward to this week. Welcome to your Monday Mortgage Minute for January 26, 2026. Let's get right into it. Last week, markets went absolutely haywire, and I know many of you are wondering how a currency shift in a place like Japan and a potential U.S. government shutdown could affect your mortgage quote here in the United States. It seems like the ground is shifting under our feet just when we need some stability, right? Well, let's look at the Japan carry trade. It's also known as the yen carry trade. For years, investors in that country have borrowed free money at near 0% interest rates to use to buy US bonds and stocks. Last week, Japan yields hit a decade high. Suddenly, that cheap money became expensive. Those investors rushed to sell their US assets to pay back their Japanese loans, and it created a massive sell-off. It's not that our economy broke, it's the global plumbing that our economy depends on got clogged. Does that make sense why your local interest rate might spike when a trader in Tokyo needs to sell off all his assets to cover his margins? It's similar to what we get into with the Fed with a data dependency trap. We have the Fed, they're in their meeting, it concludes Wednesday. We're hearing the term data dependent a lot. But how can that be data dependent when the government shutdown delayed the very reports that they need? This uncertainty is why we saw durable goods come in at a shocking 5.3%, way higher than expected. When the Fed says they are waiting for data, what they're actually saying is, we're flying blind. Think of it like this. If you were in a position where your future depended on a pilot who couldn't see the runway, would you want to wait for that landing, or would you want to secure your position right now if possible? That's why your loan officers and mortgage folks are so intent on getting you locked in when we see these troughs and we have some consistency in the markets. And why does it that a cut doesn't always necessarily mean a rate drop? Well, the most important part, a Fed basis point cut does not automatically mean lower rates. That the Fed cuts rates this Wednesday, but their commentary sounds worried about the inflation market or the Japan effect. The bond market will actually push rates higher to protect themselves. The market trades on the story, not just action. If the Fed signals a pause in future rate cuts, the market treats that like a rate hike. That sounds counterintuitive, doesn't it? We're riding the 25-day moving average, but with the Fed meeting concluding Wednesday, that floor is very thin. How would it impact your peace of mind to have your rate locked in before Jerome Powell takes the podium for what could be his final speech as Fed chair? I'm here to help you filter that noise. I'm Paul Messina, Canopy Mortgage, and this was your Monday Mortgage Minute.